Hello traders, you're welcome to this video. So in this video, we are going to be looking at one of the best trend line trading strategy. So if you're a fan of price action, then you might want to stick around till the end of this video as we'll be looking at a very important aspect of trading based on technical analysis, which involves the trend lines. Okay. So now what are trend lines? Basically, trend lines are straight lines drawn on a chart to connect two or more price points. Okay, when you have a line drawn on a chart connecting two or more price points, you automatically have a trend line. As we can see here, this is a trend line that connected these two price points. Okay, now they help traders identify trends and potential reversal points. As we can see, we identified this as a bullish trend, and then it helps us to know when we could possibly have a reversal. Like when price got to this trend line, it got rejected, and when price got to close to the trend line, it got rejected again. So it helps us identify potential reversal zones in addition to knowing the current trend. Okay, so basically we have trend lines that are used to determine an uptrend. We have uptrend lines which are upward slopes that are formed by connecting a series of higher lows, such as this. It indicates a bullish market, and we also have trend lines that helps us indicate bearish markets. These ones are formed by connecting a series of lower highs. As we can see in this case, we are connecting lower highs, indicates a bearish market. And then we have horizontal trend line, or sometimes, well, not in some cases it's usually not exactly called a trend line, but some persons still decide to call it a horizontal trend line. It's a flat line formed by connecting a series of price points at the same level. In this situation, we have points the price points around the same level, so it indicates consolidation or sideways movement, as we can see here. Okay, now how do you draw trend lines? The steps to draw trend lines involve, first of all, selecting your time frame. Yeah, you have to select the time frame that you want to do your analysis on, the time frame that you want to draw your trend lines on. Okay, now choose the time frame that suits your trading style. If you are a scalper, you may want to use maybe 1 minute, 5 minutes, 15 minutes time frame. For a day trader, you can consider maybe the 4 hours, 1 hour time frame. Well, for a day trader, you might not even get as much as the 4 hours, maybe 30 minutes, 1 hour time frame. Well, depending on how long you like holding your trades though. As a swing trader, then you can possibly consider the 4 hours daily time frame. It all depends on your tolerance for holding trades for long. Okay. Then after selecting your time frame, you have to identify key points. Okay, for an uptrend, identify at least two points of reversal. We can see we have identified one, two, three, but you just need a minimum of two to draw your trend line. Okay, so identify at least 2 points of reversal. Then that is two lows for an uptrend line. Then for a downtrend line, identify at least two highs that you would use to now draw the trend line. Just connect those two highs together and you have a trend line. Okay, then for the horizontal, just identify a series of prices that are around the same level. It must not perfectly be at the same price, but at least around the same zone. You can see there was a rejection here, rejection here, rejection here. So we have a horizontal trend line here. We see that there was a rejection here, there was a rejection here and here. So we have a horizontal trend line here. Okay, so you just have to connect the points together. All right, now when you want to use the trend lines to trade breakouts, you have to understand that trend lines are used to trade breakouts. It's one of the ways that you trade with the trend lines. You can either trade trend lines for breakouts. You can also either trade the trend lines for a trend. You can use it to trade the trends, or you can use it to trade breakouts. Okay, if you're trading trends, you might want to look for buy opportunities in a bullish market when price bounces off the low trend line. On the other hand, when price bounces off the uptrend line, or like the higher trend line, that's the trend line that's connecting the highs. But I want to look for sell opportunities, that's the bearish trend line, and in this case the bullish trend line. Okay, and then this is mostly for trading ranging markets or for trading breakouts. So in this case, you might just want to be riding from down to up and down to up and down, like that, down to up to down, from up to down and back to up and back down and back up, like that. This for ranging markets, the horizontal trend lines. Okay, so in this case, you might just want to enter a sell, exit your sell here, enter a buy, exit your buy here, enter a sell, exit your sell here, and then you can set your stop losses right above the swing highs and the swing lows. Take profits is going to be at the resistance and support levels. Okay, now when you want to trade breakouts, when you have a breakout in the case of the horizontal, just look for a little bit of retest, and then you can also look at that for at the lower time frame in case of if it doesn't show prominently on the higher time frame, and then you enter your position. If it's a bullish break, if it's a bullish breakout, enter a buy position. If it's a bearish breakout, enter a sell position, and then you can consider setting your stop loss right at the next support level for a bearish breakout and the next resistance level for a bullish breakout. Like in this case now, we had a bearish breakout. This was been a good opportunity to take our profit. And then as for this, the bullish breakout that occurred here, we don't exactly have much of a reference, but this would have been one of the references, but it's not too far away. And then because this particular asset XAUUSD is actually forming new highs, it has already formed a new all-time high, so we don't exactly have a reference point for this particular breakouts to take our profit. So you just want to be watching out in this kind of situation. Just be watching out for any signs of a reversal. It could be chart patterns, it could be candlestick patterns, and then you exit your trade. Or you can use indicators such as the momentum indicators that can, give you signals of overbought and price coming down from the overbought level, or any other indicator of your choice, you can use to confirm your exit in this kind of situation. Then as for trading breakouts from trend lines, when you have a breakout from a trend line, like in this case, we can see that we had a breakout here and there was a retest. Remember that when breakouts happen, chances are that you will have a retest before the breakout continues. That is going to validate the breakout, right? So we had a retest here and we would have entered a sell right after that point. Take profit could have been above the breakout level. Stop loss could have been above the breakout level, and take profit could have been at the nearest resistance. Or you can, if your risk to reward ratio is not good enough, you can consider the next resistance point would have been this. Okay. Then as for uh bullish breakouts, it's just the same thing. Okay, just the opposite. And then when you have the breakout and you have a retest, you just enter your buy. You can look for the retest on the smaller time frames if it does not show prominently on the higher time frames, and then enter your stop loss. Set your stop loss below the breakout level. Take profit can be at the nearest resistance zone. Okay, so basically that is how it works. Okay, now one of the importance of trend lines is that it helps you to visually represent market direction. As we can see in this case, we are sure that this was a bearish market for a while. In this case, we are sure that this was a bullish market for a while. In this case, we are sure it was a ranging market for a while. And it helps you to identify support and resistance levels. For the trend lines that are diagonal, it helps you identify whether it's a bullish um whether it is a climbing support, or a declining support, or a climbing resistance, or a declining resistance. For example, we have a climbing resistance here. That is a resistance that was increasing. Here we had a resistance that was decreasing. In this case, we had a support that was increasing, and then here we had a support that was decreasing. So trend lines help you identify dynamic support and resistance levels. They are called dynamic because they are changing, while the horizontal trend lines are the ones that give you static levels, static resistance and support levels, because they are not changing. Okay, now we can also make use of indicators like the moving averages, the RSI, just to confirm your entries and your exits. Okay, it's also important. Now it's important also that you make good use of risk to reward ratio. Okay, if you are risking $1, you might want to be targeting minimum of $2. That's the risk to reward ratio of 1 to 2. Okay, so that even if you have equal number of good trades and bad trades, you're still going to be in the positive side. Okay, now utilizing trend lines is essential for analyzing market movements and making informed trading decisions. By effectively identifying, drawing, and using trend lines, traders can enhance their ability to spot trends, reversals, and optimal entry and exit points. Combining trend lines with other technical indicators further increases the accuracy of your trading strategy. I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so that you don't miss out on more trading videos. Thanks for watching. Happy trading.